On December 27, 1945, the International Monetary Fund and the World Bank were officially born. They gave them boring, bureaucratic names. That was intentional, because what they really are is this: the loan sharks of the global economy. This is one of the greatest PR lies in financial history. We are told these institutions exist to help developing nations and reduce poverty. Many of the countries the IMF has helped for decades are on their fifth or sixth program, rolling old debt into new debt under permanent austerity. They have become the primary mechanism by which the West strips the assets of the global South without firing a shot. Here is how the scam works. It is called the debt trap. Step 1. The World Bank goes to a developing nation, say Ecuador or Nigeria, and says, "You need development. Here is $1 billion to build power plants and roads." The leaders of that country take the money. Many of them are corrupt, but corruption is a feature, not a bug. The system actively selects leaders who will trade national sovereignty for short-term dollars. They hire American construction firms, Bechtel, Halliburton, to build the projects, so the money immediately flows back to the U.S. Step 2. The country is now saddled with $1 billion in debt, denominated in U.S. dollars. Step 3. The Federal Reserve raises interest rates, like they did in the 1980s and again in the 2020s. Suddenly, the debt payments explode. The developing nation cannot pay. Step 4. The country goes broke. They face default. Their currency crashes. Step 5. The IMF arrives. They say, "We will rescue you. We will give you a loan to pay the interest on the old loan. But there are conditions." These conditions are called structural adjustment programs. It is a polite term for looting. The IMF tells the country, "You must sell your water rights to Nestle. You must sell your oil fields to Exxon. You must cut subsidies for food and fuel for your poor citizens. You must devalue your currency so your labor is cheap for Western corporations." The country loses its sovereignty. It becomes a vassal state. Its resources flow out to pay the bankers in New York and London. This has happened in Argentina, in Greece, in Indonesia, in Jamaica, in Kenya. Not every project is a cartoon villain plot. Some roads and dams do get built, but the net effect over decades is the same: sovereignty down, external dependency up. It is Neo Colonialism, this time enforced with spreadsheets instead of soldiers. They don't need to send the Marines anymore. They send the economists. John Perkins wrote about this in Confessions of an Economic Hitman. He was one of them. He admitted the playbook. It is a conspiracy that operates in plain sight. But in 2025, the game is changing. The loan sharks are facing a revolt. Why do you think the BRICS Alliance, Brazil, Russia, India, China, South Africa, and the new members, is growing so fast? It's not because they love each other, it's because they hate the IMF. They are tired of the Washington Consensus. They are tired of having their economies destroyed to protect the US dollar. They are building their own bank, the New Development Bank. They are building their own payment rails. They are saying, "We will not pay the vigorish anymore." This is a direct threat to the American standard of living. If the Global South stops taking IMF loans, they stop demanding US dollars. If demand for the dollar falls, the value of the dollar falls. All those dollars that were exported for 80 years will start coming back home to America. This is the Triffin dilemma unwinding. For 80 years, the U.S. sent dollars out and sucked goods in. If that flow reverses, you don't just lose privilege, you import the inflation you exported. This is how you set up a potential inflation shock in the US, decades of exported dollars trying to come home at once. It could mean a sharp devaluation of the dollar and a brutal drop in living standards, especially if policymakers respond the wrong way. The cheap coffee, cheap chocolate, and cheap goods you enjoy, which were subsidized by the poverty of the global South, will become much more expensive. The loan shark model only works as long as the victim is scared and isolated. But the victims have formed a union, and some of them have nukes. On this anniversary of the founding of the IMF, look at the global map. The West, the G7, is shrinking in economic weight. The global South, BRICS and beyond, is rising. The predator is becoming the prey. The US government used debt as a weapon for so long they forgot that they are the biggest debtor of all. Who bails out the IMF? Who bails out the US Treasury? Nobody. There is no lender of last resort for the empire itself. Here is the architect's view. The global financial architecture is breaking. The institutions of 1945 are obsolete in 2025. Don't let your core safety net depend entirely on institutions born in that era. The emerging world order will be based on commodities, not credit. The nations with the gold, the oil, the wheat, and the copper will make the rules. The nations with the spreadsheets and the consultants will discover that power no longer speaks Excel, it speaks barrels and tons. None of this is personal financial advice. It is a framework for understanding which way the wind is blowing. The loan shark eventually gets his legs broken. We are watching the slow kneecapping of the Western financial system in real time. Make sure you aren't standing next to it when it falls. Your job is not to save the system. Your job is not to be underneath it when it collapses. I am the architect, and I will see you tomorrow.